Hi, welcome to Cash University, opening the door to more cash in your life, guaranteed. I'm going to keep this short, but I do want you to understand that Cash University is a platform to bring educational information to you so you can make informed decisions and, and increase your financial growth. Not only increase it, but protect it. So there are many things that we are not aware of, we're not taught. Financial literacy is not something that is given to us. It's beginning to be shown to us, but for many years it has not. There has been a neglect in our society, and therefore many people are not able to save sufficiently for retirement. They're not able to manage their funds um, very well, and it's causing a lot of havoc in the communities. So, for those of us that do have some knowledge or information, whether it's specialized or newly learned, I think that we should give of what we know so that we can lift up the community, so we can lift each other up, and in that way we all rise together and we become a more sufficient people that take care of ourselves instead of having to depend on the government, and when the government doesn't come through, then we suffer for it. So on this episode, we're talking about rate buy down for people that are looking to buy a house. They may go into these new subdivisions and they are offer incentives or inducement to buy their property by being offered a rate buy down. Now, there's different formulas. In this particular one that I'm using, this rate buy down is for the term of the loan. And basically what a rate buy down is buying a cheaper interest rate. You may qualify, let's say in this example, you qualify for a 6%, and you can buy without qualifying, not with a credit score anyway, but you can qualify with the amount of money you pay. You can buy a cheaper interest rate. So that's what a rate buy down is. Now, and when you go into these new communities and they offer a rate buy down, it's more of a temporary thing. It's called 321 in most cases. So those are temporary interest rates reductions, and I'm going to cover that at the back end of this. The one we're doing here on the front end is the rate is reduced for the entire term of the loan. First thing I want to cover for those people that may not be aware of how interest accumulates on a mortgage. We have a $400,000 mortgage at 6% interest rate, and at 6% you will pay back $463,352 over and above the $400,000 that you borrowed. The formula for buying down the rate is 1% of the loan amount. So 1% of 400,000 is $4,000, and that buys a quarter percent reduction in the interest rate. So the interest rate for 4,000 goes from 6% to 5.75%. You can buy the rate down even more using that formula. You can get a 0.5% reduction, you can get a 3/4% reduction, you get a 1% reduction, however deep your pocket is. So that's the process. These are the amounts of money. So what does 5.75% do? How much money does it save you on interest? Well, here we go, save you $23,000. And some people buy the interest rate down or want a cheaper interest rate because they want a reduced payment. So at 6% is $23.98. At 5.75% is $23.34. That's a $63.91 reduction in over 360 payments, which equals 30 years. That equates to $23,000. Now there is an alternative. An alternative that I call strategic money management. And part of this platform is to introduce you to things that you may not be aware of, and this is one of those things. It's actually part of the 4 pillars that I advocate in creating wealth through home ownership. Those 4 pillars are intelligent home ownership, strategic money management, legacy insurance planning, smart homeowners insurance. If you put these 4 components in place, you will absolutely rival other people that's trying to create wealth. You will absolutely be able to do it, knock it out of the park. Now, I have either been licensed or certified in each one of these categories, so I'm coming from a different perspective that many people may come. Some people may come from just one of these perspectives. Let's say, for instance, they may be a licensed real estate agent, which I am as well. So they may only talk about home ownership. I go a little deeper. I'm talking about intelligent home ownership because my experience in working with investors as well, and, seeing how they go in and rehab property, and also working with having the inside knowledge of code enforcement and some other things, with roofing, being in the roofing industry, etc. So let's get back to the strategic money management because this is an alternative to the rate buy down. And we're going to use the same things that was used over here. We're going to use the 6%. We're going to... Oh, I jumped ahead of myself. I'm sorry. So this is important. Something I put in, and so I kind of jumped ahead of myself, but I went back and I put this in because I thought it was important. Since you don't really know anything about this strategic money management, let me give you a little background. So as of December 2nd, it has an A1 rating with the Better Business Bureau. And on Trustpilot, this is what people that are actually using the product have gone and made reviews. And as you can see here, there have been positive reviews. Has a 4.6 star rating. Now, Trustpilot has used AI to go in and read all of these 191 comments and summarize it. And here, let's just kind of go through it real briefly. It says reviewers are overwhelmingly had a great experience with this company. They appreciate the program for its potential to transform their financial lives. Transform their financial lives. Many expressing gratitude for the support received and clarity it brings to debt management. People highlight the user-friendly nature of the system, noting that it simplifies complex financial concepts. See, this is complex right here. You had a $400,000 loan at 6%, and then when you pay it back, it's more than what you borrowed. How is that 6%? I don't know. Figure that out for me, please. But that's what it's doing. It simplifies complex financial concepts. Consumers also value the personalized guidance and find the staff to be knowledgeable and patient. Consumers report that the program is a valuable tool for managing cash flow and building wealth. Reviewers are pleased with the customer service, describing interactions as professional and helpful, the ability to see a clear path to debt freedom, and the potential for significant interest savings are recurring themes in the feedback. Outstanding remarks. So here, based on 6%, and we're going to compare apples to apples. They paid $4,000 to buy the rate down. So just let's suppose they paid $4,000 to get this program. That way we can evaluate, based on the same criteria, the value that this would bring to the marketplace in comparison to the rate buy down. So here we see a very conservative, now I'm putting this here because I know what the program does, but for you, I want to use the most extreme conservative figure I could come up with, which is a 30% reduction in the interest that you would pay to the bank. And that 30% reduction would be a savings of $139,000, not $39,000, $139,000. It didn't reduce the payment. You're still making the same payment at that 6%. How is that possible? Well, have you figured this one out yet? It's complex math. Plus, it's paid off early. Not only do you get a significant savings, it's also paid off early. How much is that worth? If you could pay this property off 10 years early, how much is that really worth? But here's the thing. Here's a comparison side by side. And how do you feel about it? Which looks best for you? We're talking about the same amount of investment. Which one works best for you? But here's the fact. The fact is 62 to 67% interest reduction is not uncommon. I've seen this over and over again. And we're talking about not just the mortgage, we're talking about piling on all the other debts you have. Your car payments, your credit cards, your store loan, student loan, all that together. And we're talking about being debt-free potentially 12 years. But, of course, that's not everybody. You know, so we have a goal. I have a target for my people. I have a target to at least provide a 50% savings, right? And that 50% savings has a resulting savings of 15 years as well, because 15 is half of 30 years, right? Imagine that. And what's the monetary savings? Wow. Isn't that amazing? Potentially $231,000. Not $31,000, not $131,000, $231,000. Now you see why there was so many positive reviews on Trustpilot. Now imagine if this was an incentive for first-time home buyers going into a subdivision, right? Giving them this option. I think people would appreciate having that option. We just need to make these developers aware of this, and they can present it as an option. So here's the 3-2-1 buy down. This is what they're offering. This is what the developers and the subdivision folks are offering people. They're offering the 3-2-1 buy down. If you ask me, it's setting people up for failure, because in the beginning it's a 3% reduction in the interest payment, right? And then the next year it's 4%. Next year 5%, and then the next year after that they settle down to that 6%. So each year their payment is going up from $1,684, next year $1,907, from $1,907 to $2,145, and then the next year is $2,396, and that can cause some financial stress on some folks. So here's the savings over here, as you can see. And here's the cost. So, you know, It's a choice. It's a choice only if you know, only if you're aware that this program exists. But if you were aware of it, which would you choose? These savings at this cost, or now looking at the savings not only in money but also in the years? If this program did cost $4,000, would it be worth the investment in comparison to this cost or this cost? You tell me. And what does that do for you? This is money that can be used to go towards your retirement, help pay for your children's education, go on vacation, do some shopping, entertainment, and you know the more money, the better the romance. Those are the additional benefits, all from the same money. This is not new money. This is the same money that would have gone to the lender, now enhancing your lifestyle. I want to thank you folks for your time that you spent with me. And there will be more things coming out of Cash University. So I wish you the best, be prosperous, and be helpful to others. Spread the love and the joy. Bye for now.